Hey, it's Brian. I'm just going to jump into something that scared the absolute shit out of me the other day. So let's go into it. So, this is a marking of all the federal debt that's been racked up by the US federal government over the years. It starts back over in 1967. And we go back, we see it's been a slow growth. It reached half a trillion dollars back in the early 70s. In the 80s, I remember in those days reading about how we had $300 billion deficits, $250 billion deficits, $150 billion deficits. Those were big numbers. Moving on, the debt due to government spending kept growing very, very steadily in the 80s. In the 90s, we had same thing, a lot of growth, a lot of liquidity. And we even reached a point where the debt went down for a few quarters. Okay. When we get into the 2000s, different story. Here we are. We're in the 7 trillions, the 8 trillions, okay? The downturn of 2008 goes up significantly, goes up $2 trillion. Then we have the zero interest rate policy of the Federal Reserve, and the money spigots are just flowing. The government's borrowing like mad, it's spending like mad. We start the decade at just under 12 trillion and end the decade at almost double. And then we get to doomsday. We had 2020, everything shut down. That went to 26 trillion. From there to 2023, 26 to 31 and a half. And this is what I want to focus on here. 2023, we start at 31 trillion, go to 32 trillion, 33 trillion, 34 trillion. We are adding $1 trillion of debt every single quarter. And why does this matter? It matters because of this. Interest on the debt, $817 billion. With interest rates going up, the refinancing of debt going on, rolling over of debt, borrowing money to pay money already owed. It's kind of like borrowing off one credit card to pay the bills against another credit card. Pretty soon, this will reach $1 trillion. $1 trillion will be owed for debt. $1 trillion. And we're racking it up. $1 trillion every 90 days. That blew my mind. And the only thing I can say is that with a growth like that, go back to the chart. We are spiking and reaching the event horizon. The whole thing coming out of this is that as more and more money rapidly is increased and put into circulation, the value of every single dollar currently in existence that's in your wallet, that's in your bank account, that candy bars, gasoline, houses, and stocks are priced in become less and less valuable. They have less and less purchasing power. Your wages have less and less purchasing power. Inflation is partly due to things like more demand, less supply, but a major, major, major factor in our lifetimes has been because so much money has been printed over the last 20 years that their dollars have lost purchasing power. they've been devalued. And it's as simple as that. I'm not giving financial advice, as it says here. But if someone were to ask me, what would I pursue? I would say, get your wealth, your money, into whatever hard assets you can. Real estate, numismatics, digital assets, businesses that generate revenue, anything that can retain value, whatever it is. Because as long as it's something tangible and it's something that people will want, the price is going to go up and down. And in this case, the numbers are going to go up because the value of each unit's going down. So it takes more of the same, more to buy the same thing. So even though the artwork may not necessarily be valued more, the currency it's being priced in would keep up better than if you just held the currency. So yeah, this is not looking good. And the thing is, this is global. It's not just the US. So how's it going to end? Eventually, I think it's probably going to get fixed. There's going to be a lot of distortion, pains, reallocation, reorganization. It's not going to be a pretty picture. And a lot of people are going to feel pain. But I feel like that's the unfortunate lesson we're ended up learning. When you have a monetary system that functions this way and throw it into the context of how humans behave and respond to incentives and seek their own fulfillment of needs and wants, this is what you get. So we need something better, something that's a little bit more honest, same rules for all. I'm not going to go down that road on this video. I just wanted to point out how bad the debt situation is. It was predicted. There was a book, Bankruptcy 1993, I think it was called. I think it was Harry Dent who wrote it. And he said, it was predicting massive defaults. Well, he didn't realize just how large the monetary supply could get and how much things could be gamed and juiced and squeezed. Well, I honestly think we've reached the end game. When things start going down a drain, I have no idea. I'll never. I can't predict timing. I just can't. It's too big of a thing. But yeah, if you haven't built the life raft, build that ark. Look for some sort of investable assets that don't have to sit in cash, that have a low chance of confiscation, and that will have strong enforcement of property rights if things got ugly. So I'm going to leave it at that. Take from it as you will. Be wise and be well, everyone. Talk to you soon.